The London silver market is breaking right now. A systemic flaw hidden for decades has been triggered. This is objective analysis, not financial advice. The proof? A number so extreme it dwarfs the Hunt brothers squeeze. The cost to borrow physical silver for just one day has exploded to an annualized rate of 100%. Why? Because the vaults are emptying. The real deliverable silver you can actually trade has collapsed by 75% since 2019. The system is running on fumes. This isn't speculation. This is a historic short squeeze. Traders are now so desperate, they are air freighting bars across the Atlantic just to meet obligations. This is market chaos, and it creates one urgent question for every prudent investor. When the paper market for silver collapses, where does your wealth go for safety and, more importantly, for profit? Mainstream media will call this volatility. They are wrong. This is a reckoning. For years, the paper market traded hundreds of digital claims for every 1 ounce of real metal. That illusion is now shattering. This is not 1980. The Hunt brothers were a speculative attack. This crisis is structural. We have a nearly 800 million ounce supply deficit. The industrial demand from solar panels, electric vehicles, and AI data centers is insatiable and permanent. The market is simply running out of metal. And here is the trigger that could turn this crisis into a catastrophe. Market insiders are now watching one single critical development: China. If they freeze or severely slow their silver bullion exports, the Western short squeeze will become a full-blown market collapse. As one chief investment officer stated, "I have seen nothing like it ever. What we are seeing in silver is entirely unprecedented. There is no liquidity available currently." This is the moment the paper contract and the physical metal divorce. And for the prudent investor, that divorce creates the opportunity of a decade. So, what do? You implement a barbell strategy. On one end, you have safety and wealth preservation. On the other, you have asymmetric, opportunistic growth. Physical silver is the only asset that provides both right now. The math is undeniable. With a structural deficit and historic squeeze pressure, prices of $60, even $80 an ounce are not fantasy. They are a reflection of silver's historic potential against gold. This is your asymmetric upside. Your priority is immediate. Phase 1, accumulate physical silver now to hedge against this structural deficit. This is your core position. Phase 2, monitor global silver supply announcements daily. Phase 3, be prepared for volatility, because silver can move 1.7 times faster than gold. This is not about trading paper contracts. This is about taking sovereign, physical possession of the one asset that the system is desperately proving it cannot function without. This event is the ultimate stress test. It reveals with brutal clarity the difference between a paper promise and a tangible asset. True financial independence in this new reality requires one thing: owning what the system cannot print, cannot default on, and is now desperately short of. Become sovereign. Thank you for watching.